Let's welcome on board Hemang Jani then and figure out what the trading day ahead is going to look like and what you as an investor should be doing. Hemang, hi, morning. Just rubbing our eyes in disbelief, Hemang. All of us here in the studio never thought that HDFC Bank is going to lead such a decline for the markets. And it seems like looking at the ADR price action overnight that we're headed in for another rough day for HDFC Bank and maybe the rest of the banking pack too.
Yeah, good morning, Aisha. I think after enjoying such a good party for an extended period of time, we have hit the roadblock, and the kind of reaction that we've seen in terms of the HDFC Bank stock price, the Bank Nifty, and also Nifty, I think is something that the market was probably not hoping for. But since we are into earnings season and the markets have run up, people are going with very high expectations. So these kind of disconnects would happen. I think market is going to realign to the reality that a large sector like BFSI, which is a 35-40% kind of a weight, if the actual earnings growth is not in line with the consensus, there is going to be that realignment and readjustment, and you will see the sector rotation playing out. I don't think there is a case for a significant correction at the next level, but surely some of the other numbers which are going to be out, the likes of ICICI, Axis, IndusInd, which is going to be out today, people are going to be watching out more closely. So how soon are we really going to go through this kind of a correction depends upon the outcome of those numbers.
We knew correction was coming, but I never thought that HDFC could be the reason of this correction. And ADR is telling you that we are down. So Kunal, I would ask a direct question. 10% down yesterday, ADR is saying down another 10. At what point you would be a contra buyer in HDFC Bank? वो कहते हैं ना घर बेच के ले लो.
No, price-wise, it's very difficult to put a value to the point where the stock may be oversold, but we have to look at a point when the selling arrests first. So yes, after yesterday's 25% jump in the open interest for HDFC Bank, if today we start to see unwinding immediately after a 10% gap down, assumingly a 10% gap down, then I think it could be a point where we may look to go for a contra buy. But if the stock gets into a further addition of open interest on the short side, then we may expect one more round of selling which could happen. So it's very difficult to put in a value for that when the stock price would probably get arrested. We look out for a point where there's a slight change in the texture in terms of the open interest. Now we look at the previous major supports just in terms of the prices. I think 1450 was the low in the month of November for HDFC Bank, 1450, 1455. That's the first point of support which we look out for. But if, as I said, if the change of OI doesn't happen and if the stock breaks below the 1450 mark, then we could probably expect a much more stronger downside for the stock.
Just marking some of the other newsmakers, you had specialty restaurants as well, which came out with numbers. The margins this time contracted to about 20.2%. Revenues came in at about 116 crores. That's up nearly 11.8% on a year-on-year basis, with profits down nearly 10%. That stock will be closely eyed. Numbers post-market hours yesterday. And there was also something like an Oracle Financial Services, which came out with their earnings, a 26% growth in the overall revenue, which came in at about 1823 crores, and PAT shot up a solid 77%. I'm talking about Oracle Financial Services sequentially at about 74 crores. Just wanted to get in your thoughts then, Hemang, maybe on some of these quarterly earnings and what you've read into these numbers. Is there anything in particular that stands out?
On early days, but you mentioned the specialty restaurant, and our sense is that the QSR space, which is a part of the discretionary consumption vertical, there is definitely an element of slowdown, and in an environment where we have festival seasons and the consumption trend looks like very strong. This is a pocket which is really not showing that kind of a positivity. So I think we will have to be far more selective about the pockets where you're seeing a better trend, and quarterly numbers will clearly give us more insights into it. So when it comes to discretionary consumption, I think Titan is something that we've been liking. In terms of other pocket, auto is something that we think that is fully priced in after 2.5 years of outperformance. So we would be avoiding auto at this point, but stay very, very selective on the discretionary consumption space.
Let's put out that tactical idea from Morgan Stanley. I love these tactical ideas from Morgan Stanley. It's almost like saying that we know there is a buyer in the market. We estimate a 70 to 80% probability that in next 60 days, Bajaj Finance will rise relative to the country index. Logic being, all growth is there. Valuations are not stretched. Their raw material for any NBFC is low-cost deposits or access to deposit, which Bajaj Finance is getting abundantly because of the franchise value they have and because of the rates at which they are lending. And since it's an NBFC, the NIMs are higher. They're less regulated. They're able to lend in a much, with better higher rates. And the credit growth, according to the December numbers, what we got, the quarterly update was again robust. So will money move out of HDFC Bank to Bajaj Finance? And there seems to be a logic in this point, Hemang, that money will move out of HDFC Bank to Bajaj Finance.
I doubt, Nikunj, that the money would necessarily move from HDFC Bank to a Bajaj Finance only. I think a part of the money would move into some of the insurance companies, like for example ICICI Lombard, or some of the other insurance companies where the trend is better. Secondly, people may also have to rebalance and realign their allocation to the banking sector itself. Of course, it's a function of how the rest of the numbers came out. But I think, Bajaj Finance also has been a big underperformer, and despite the credentials and the pedigree that it brings, the fact of the matter is that in a current environment where RBI is trying to, slow down the pace of loan growth, I don't think Bajaj Finance will be able to kind of deliver absolute returns in a meaningful way.
Okay, fair enough. Meantime, there's also Z Entertainment that's in the spotlight, Hemang, and we just highlighted the latest news coming in that despite the grace period having been given to the company, there is still no real conclusion when it comes to the merger talks between Sony and Z Entertainment. What's your assessment as to what this means for shareholders of Z Entertainment?
I think surely, the way this entire saga has panned out, I think for more than now 1.5, 2 years, imagine the kind of delays and the volatility and uncertainty it has brought to the shareholders of Z. I think, this is more of a issue where one cannot really put any kind of a timeline. I would certainly stay away from the stock. I think even if I have to buy 5 or 10% higher from a certain price point, once there is a clarity about the deal and the management issue which is there, only then would it really make sense to buy rather than getting into an uncertainty zone for an extended period of time.
All right, there has certainly been nothing but uncertainty when it comes to a Z Entertainment. Meantime, Naresh, let's check in on the charts of some of the other stocks within the broader markets that actually fell under pressure in trade yesterday. Something like a SAIL was down nearly 5.4%, and you also had a Tata Steel which came under pressure. How are you reading into some of these metals names?
So they've been very volatile. We had a strong move across the board. So SAIL went up from 80 to 100 levels to almost 125, and now correcting back to 105, 110 zone would be normal. That's the volatility for the stock. So for now, would be looking out for a buy closer to 105, 108. Same case if you look at Tata Steel. The stock has been a relative underperformer, not been able to cross that 140 mark, which was the high in 2022. And this 130, 140 zone has been a problem zone for the stock for the last almost 2 years now. So not really looking at Tata Steel as a trade, but SAIL could be interesting around 105, 108 levels.
Some more stocks which deserve a mention, and it's a list of breakout stocks. I'm going to take my chances with this one. Kunal, Vaibhav Global, breakout stock. I think it's gone from 400 to 440, 450, thereabouts, stuck like a rocket.
Yeah, so chart-wise, it's still looking good. I think if I'm not wrong, it's forming a bullish flag pattern on the weekly charts. So I think the stock is seemingly coming out of a consolidation from August highs. I think August is where the stock was almost at this 470, 475 mark. From there, it made a consistent lower high, lower low pattern. So more of a consolidation, which lasted when the stock was sub 400 levels. Now it's coming back about the 450 mark. So it's a classical bullish flag pattern. But my only concern is with the timing with respect to the overall market, because when you see such kind of a breakout for stocks in the mid cap arena, where you see the broader markets as well as the benchmark indices going into a sell-off, those breakouts may be a bit short-lived. So you may see a couple of days of strong price up move for the stock, but eventually these stocks, they tend to plateau out. So the best way to try and trade is to trade with the trend, but keep the targets a bit more lower than what you could have kept in a usual uptrend when the markets would have been on full song.
Hemang, let's get in a take from you then as to how you're looking at Nazara Tech. They're going to acquire some stake in an influencer platform, and Nikhil Kamat's firms are looking to increase their stake via preferential issue of 250 crore rupees. Given the latest fundraising announcements that have been coming in, do you track Nazara views?
Awan, I don't track Nazara, but I think given the regulatory uncertainty around the GST and the fact that one will really have to take a very long-term view on the space like Zara and gaming-related companies. So we would be more focused onto the companies where there is a slightly more handle on the earning visibility. Yes, from a short-term allocation perspective, for certain investors who have a slightly higher risk appetite, some of these companies may make sense.
I want to go back to the SGX Nifty. The implied market is indicating that it will be down by 163 points, which is not like a scary indicator, considering that ADR of HDFC Bank is down 9%. Now, there are two ways of looking at the market right now. Is HDFC Bank number more like a macro sign that, okay, HDFC Bank, the best of the bank, is going through a tough time in terms of getting deposit? And if that is the case, then will that hold true for other banks? If that does not hold true for other banks, then trust me, HDFC Bank is going to really be a ranked underperformer, which it has been. Second, what would be the implications of this on the Bank Nifty? We've discussed that. Third, what would be the implications of this in mid and small cap stocks? And if the selling does not stop because of technical factors, margin positioning, risk off moments, then in next 8-10 days, you actually could be seeing what could be called as an early Flipkart sale. Yes, I think if markets fall because of technical factors like a selling in HDFC Bank, a disappointment which could come from any other large cap stock, and there could be a margin impact which will have a domino effect, so to speak, then you just got to say that, okay, I'm going to wait it out for next couple of days, let the dust settle down, and you want to be a buyer there. I don't think we are there yet, but that is a scenario which looks like a realistic scenario for me, that the excesses get flushed out, weak hands are out, and then you really plan to entry again. So Hemang, what is there on your list which you would buy on a 10-15% decline in the mid and the small cap space?
So I think Nikunj, what you said is correct, and we have to also understand that this issue of market correction is not confined to HDFC Bank only, but the way in which the global markets are correcting and the way we are seeing the outflows across emerging markets. So I think in that context, what we would be doing is that at least for a few days we should just kind of let the market do a little bit of stabilization, and if we are talking about the mid cap names, surely some of the mid cap cement companies, something like Philips Carbon Black, some of the India focused IT companies, Map My India, Naukri, so these are some of the pockets that we would really want to get into. But I think having seen such a strong performance over the last almost about 6-7 months, it would be worthwhile to kind of wait out for the volatility to settle before you jump in.
Really not expecting to hear out some of these IT/tech names, but yeah, nonetheless.